How's it going everyone? Mario here. In this video, we're going to talk about what to expect from the CPI leading into tomorrow. We also got some interesting comments about interest rates from the Cleveland Fed president. We're going to cover that as well. We will also cover the technical analysis on SPY, and we will go over the bull case and the bear case depending on the CPI. What to expect if the CPI is good and what to expect if the CPI is bad. If you guys like this type of content, leave a like, subscribe, join the Discord, join the Patreon, link is down below in the description. Without further ado, let's get started. Tomorrow morning, we are expecting the cooks from the Bureau of Labor Statistics to give us the inflation reading for the month of April. If you don't know what CPI is, this is where the Bureau of Labor Statistics tells us how much the middle class people like you and me who works from 9 to 5 got drilled by inflation in the month of April. But it is an important data leading into tomorrow's trading session because it is a market moving event. Most of the so-called analysts are expecting a lower inflation reading from the month of March. CNBC says inflation may have already been peaked. Really? You think we are fools? It's pretty easy to sit on the ivory towers with billions of dollars in your bank account and say inflation is not so bad. Remember, these are the same idiots who said, if you think gas prices are high, just buy an EV. What a bunch of assholes. Anyway, the energy prices are expected to have gone lower compared to that of the highs of March. Don't get me wrong, you're still getting raw-dogged by the higher gas prices in the gas pump, but the expectations are for the rate of increase in the gas prices to settle down. Same can be said with the prices of food and other consumer-based services. If cooks deliver lower numbers tomorrow, we're going to have a huge short covering rally across all the indices. Market is going to jerk off to the fact that inflation is settling down, and you will see it's transitory, bro. It's already peaked, bro. Jerome Powell is right, bro. Gangs show up out of nowhere and whip their dick around. I say don't fall for their bullshit. I say be smart enough, because we have seen the same scenario happen before a few months back, only to see CPI come back stronger than ever. So what's the scenario which makes the markets rally? The expectations for tomorrow are 8.2% year over year and 0.4% month over month. If we get a CPI reading below 0.4% on a month over month basis, market is going to have a huge short covering rally leading into tomorrow. The reasoning behind this theory is, if we get a lower inflation reading, Fed doesn't have to raise interest rates as fast as they're doing it right now. That removes the 75 basis point hikes out of the cards. This stock market, which was addicted to the Fed's cocaine, likes the removal of the 75 basis points and thus rally to the upside. They better cook us some good reading and lay it on the table. Market needs it. If it's not a good report, we are going to have a huge gap down like we have never seen before. That being said, we will move on to our section 2, Fed Daily. Today morning, Bloomberg interviewed the Federal Reserve President of Cleveland, Loretta Mester. This is what she got to say about the 75 basis point rate hike. Take a listen.
You've said you're on board with a couple 50 basis point moves, but do you rule out 75?
Well, we don't rule out 75 forever, right? I mean, what I'm going to do is I think 50, the cadence we're going now seems about right to me. We're going to have to assess whether inflation is actually moving down, and then we'll be able to get more information after we do a couple of those to see.
We clearly got the message that the 75 basis points is not ruled out forever. If CPI comes out hotter tomorrow, market will start pricing in more aggressive rate hikes, aka 75 basis points in the upcoming quarter. Mester is also expecting another negative print in the GDP readings in the next quarter. If the unemployment numbers started to shoot higher, that puts us technically in a recession. But hey, who knows? She might be holding some short positions in S&P 500 and Nasdaq. I mean, they are capable of it. They have done it before. Anyway, moving along. Knowing these crooks for a while, let's play the devil's advocate. What takes the 75 basis points off the table? Tomorrow's inflation reading. If we get a lower inflation print, that takes the 75 basis points off the table at least for a shorter period of time. That, in turn, gives the market the boost it needed. Don't get me wrong, we are not going anywhere near all-time highs anytime soon. One CPI reading doesn't change anything from the macro fundamentals perspective. That being said, let's move on to our section 3, technical analysis on SPY. I don't want to sound like a broken record, but tomorrow's price action is purely dependent on the CPI reading which we get at 8:30 Eastern. Let's go over both the cases. What happens if we get a lower CPI reading, lower inflation print, and what happens if we get a hotter CPI reading, a higher inflation print. In that way, we can be prepared for both the scenarios. So let's go over the scenario 1, which is CPI coming out softer than expected. If we get a lower inflation print, don't be surprised to see a massive gap up to the upside in S&P 500. Two important levels to watch if we get a softer CPI print. Any open above 405 opens door for filling that gap at 408.50 and running a test to that big fat round number at 410. This is the scenario if CPI comes out softer. What about the other scenario, where the CPI comes out hotter, inflation is running high, market starts to price in the 75 basis point rate hikes in the upcoming meetings? If that's the scenario, if we open below 397, that opens door for running a test to 394 or 389 or worst case 385 down south. Members of the Discord and members of the Patreon will get the updates on the technical analysis as soon as the CPI report is dropped once we get the direction. Make sure to join the Discord, make sure to join the Patreon, link is down below in the description. That being said, take the high probability trades, manage the risk wisely, try not to gamble. See you guys in the next one.